Most traders miss out on great entry points and miss out on the exit points because they do not understand the foundations of the candlesticks. In this video, I'm going to show you how candlesticks are the foundational piece to the stock market that can help you with your entries and your exits. My name is Christopher Jackson, and I've worked in corporate America for over 15 years, and I still managed to be active in the stock market at the exact same time. And in this video, I'm going to show you how candlesticks speak to one another, and it shows you and tells a beautiful story that will help you enter in the trades at the right time and exit trades at the right time as well. Let's get into it. All right, everybody. So when most people see candlesticks, they see red candlesticks, they see green candlesticks, and they look at the screen, they say, man, this is a different language and I have no idea what's going on. But I want everybody to understand, like, understanding the candlesticks is probably one of the first things you should learn when you start trading. It sets the tone for understanding the story of the stock market. It's sort of like reading a book and reading the introduction so you can kind of have an understanding of what's going on in the actual book, and then going straight to chapter 1 and start there from the beginning so you can build up from there. What I want to do in this video is I want to break down what is a candlestick, right? And also I want to show you how you can use the candlesticks to actually increase better entries and get out at the right time so you don't get hit and lose your money if the market hits a level and you're not even knowing it's a level, okay? So the first thing is this: what is a candlestick? All right, it's not just a green and red bar, okay? A candlestick shows you price action. And when I say price action, a candlestick does something simple, everybody. It shows you the war between the buyers and sellers. It shows you where the buyers and sellers are buying in and selling it for a certain time period. All right. So inside of every candlestick is a fight between buyers and sellers. That's basically it. Now, the most important thing to understand about a candlestick is this: a candlestick operates off of time frames. And when you start understanding the story of a candlestick, you have to understand what time frame the candlestick is operating off of. OK, so you might say, Chris, what are you talking about when you say operate off a time frame? All right, watch this. So when we look at charts, everybody, you might have a 5-minute chart. You might have a 15-minute chart. You may have a 1-hour chart. You might have a 1-day chart. And what that means is this, everyone. It means that on the 5-minute chart, you have a candlestick and you have buyers and sellers buying and selling for 5 minutes. And then that candlestick will close. So say, for example, it opens at 10 a.m. and it closed at 10:05. From that time period, from 10 a.m. to 10:05, buyers and sellers are buying and selling. At the end of that 5 minutes, the candlestick is going to tell you a story on who won. Did the buyers win or did the sellers win? If you have a 1-hour time frame, say it opened at 10 a.m., the fight started at 10 a.m., the fight ends at 11 a.m. So for that 1 hour, you have buyers and sellers buying and selling, buying and selling. And then at the end, at 11 a.m., the candlestick is going to tell you who won. Did the buyers win or did the sellers win? That's the story that the candlestick tells us. And by us understanding the different time frames, it gives us a better idea of when we should get in and when we should get out. Everybody, this is one of the most important parts of candlesticks, and that's what I'm going to go into and break down to you right now. I'm going to break it down from the beginning for you, and I'm going to take it to the end so you can kind of have a better understanding of it, okay? So what I want to do is I just want to jump into my system right now, and let's get into it. On my screen right now, everybody, I want to kind of break down to you the candlesticks, all right? So we have our green candlestick and we have our red candlestick. So whenever you see a green candlestick, everybody, that means that particular stock is going up. It's increasing. It's going from 5 to 10 to 15 to 20. The price is going up, and that's called a bullish candlestick. Whenever you see a red candlestick, everyone, that means the stock price is decreasing. That means the stock price is going down. It's going from 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, right? It's going down, and that's called a bearish candlestick, meaning the stock price is decreasing, all right? So green candlestick means the stock price is going up. Red candlestick means the stock price is going down. Now, let's dig a little deeper though, okay? So now, everyone, we understand whenever you see a green candlestick, it means the stock price is going up. And whenever you see a red candlestick, the stock price is going down. So now let's break down the parts of a candlestick, okay? So whenever you see a green candlestick, everyone, the very first place you should look is at the bottom of the green candlestick. All right. The bottom of the green candlestick. The bottom of the green candlestick is the opening price, everyone. This is the opening price of that candlestick. Okay, so when you say opening price, Chris, what do you mean? All right, let's use that 10 a.m. example again. Okay, so say, for example, at 10 o'clock, matter of fact, let's say this is a 1-day candlestick. All right, so we know the stock market is open from 9:30 to 4 p.m. So let's say at 9:30 a.m., everyone, this candlestick is open. It comes to life. All right, and let's say it opens at $10. It opens at $10, but we know at 9:30 a.m., this candlestick started off at $10. Now, at the end of the day, when the stock market closes at 4 p.m., we see that the candlestick closed at, let's say, $20. So what's the story of this candlestick? The story of this candlestick is the stock price increased, went up by $10. That's the story of a green candlestick. The opening price is the first place you want to look, is at the bottom of the candlestick. And you see that it's opened at $10, okay? By the time the stock market closed at 4 p.m., it was worth $20. So that tells us what? The stock increased, or the candlestick increased by $10 for the day. That's the story of this candlestick, okay? All right, now, look at a red candlestick. So we already know with the red candlestick, everybody, what happens? The stock price is decreasing, okay? And if the stock price is decreasing, everyone, the very first place you want to look for a red candlestick is the opposite of a green candlestick, all right? So the first place we want to look for a red candlestick is at the top of the red body, everybody. The top of the red body, that's the opening price. Okay, a green candlestick, the opening price is at the bottom. For the red candlestick, it's at the top of the red candlestick. All right. So let's say for this example, it opened up at 9:30 a.m. at $20. And then at 4 p.m. when the stock market closes, it closes at $10. What does that tell us, everybody? So what's the story of this candlestick, everybody? The story of the candlestick is this. The stock decreased by $10. It decreased by $10. Everyone, this is the story of a candlestick. This is the story of a green candlestick and the story of a red candlestick. Okay, so once again, a green candlestick, everybody, the first place you want to look is the opening price, which is the bottom of the green body. If it opened at 10 at the beginning of the day and closed at 20 at the end of the day, guess what? It increased by $10. Now, if we have a red candlestick, the first place you want to look is the top of the red body. That's the opening price. And say it opened at $20 and at the end of the day, it closed at $10. That means for the day, it lost $10 for the day. Okay? So that's the story of the candlestick, all right? But I want to dig a little bit deeper with you, all right? Let's dig a little bit deeper, and this is where we're going to get into some buying and selling and understanding entries and exits, okay? This candlestick looks a tad bit different than these candlesticks, right? Look a little bit different, okay? So what I want to do is this. I want you to understand something I want you to understand the difference, and this is very, very important, of this candlestick from the other candlesticks, okay? So right here, everybody, what do we already know about a green candlestick? We already know a green candlestick is what? It's going up. And we already know the very first place that you want to look at a green candlestick is the bottom of this green candlestick, right? The opening price, okay? So once again, let's say for this example, the opening price is $10. Okay. All right. $10. And the closing price is $20. Okay. So what is the story of this candlestick, everybody? The story of the candlestick is this stock increased by what? $10. Perfect. Beautiful. We already know that. But something is different about this candlestick than the other green candlestick. What's that difference? Everybody, it's this wick down here. You all see this wick right here? See this wick right here? That's the difference. See this wick right here? That's the difference. So now the question is, what does this wick represent, everybody? Okay? What does the wicks represent? Glad you asked, right? So If this right here is the opening price, well, that's the bottom of the green candlestick is the opening price. This down here on the candlestick, I like to call it the LP. All right, the LP. I don't know if you're gonna let me draw a P or not, but let's see. All right, boom, LP. There we go. Okay, the LP stands for the lowest price. All right, the lowest price. So for example, we see that it opened at $10 and it fell down here and it came down here to $2. That $2 would be the lowest price of this candlestick. Okay, now let's come up here. We call this the HP. All right, the HP. All right, the H, and we have the P. All right, the HP. And the HP stands for the highest price. Okay, highest price, highest point. And with this highest price, let's say the price went to $30. All right, $30. Okay, so now everyone, we understand the story is the stock increased by $10 for the day. But now that we know the LP and the HP, what these wicks down here mean, now we understand the complete story of this candlestick. We understand that the stock opened at $10, and then sometime throughout the day, it fell down here to $2. Then it went from $2 all the way to $30, for $30 to the HP, to the highest point of the day, and then it closed at $20. Now, everyone, I know the full story of this candlestick, and that's what you want to be able to identify and know when it comes to the candlesticks. You want to be able to identify the full story of a candlestick, everyone. And this is how you do it. So now, once you understand the full story of a candlestick, you have to ask your question, how do I utilize the information I understand about this candlestick? Because remember, candlesticks communicate with each other. The candlesticks tells a beautiful story. The candlestick help you understand entry points and exit points, okay? So for this example, everybody, let's say this green candlestick right here represents Monday. I'm gonna put an M right here for Monday. Okay, so it represents Monday. And this red candlestick right here represents, let's say, Tuesday. Okay, it represents Tuesday. So on Monday, everyone, if I understand that the lowest point of the day was $2 and the highest point was $30, everyone, this helps me identify my entries and my exits for the next day, or it helps me identify major levels that I want to focus on for the next day. Watch this, everybody, okay? When this stock was at $10 and it fell down here to $2, everybody, the stock just stopped at $2. Was it magic that the stock stopped at $2, or did someone stop it from falling lower than $2? So if I drop a knife right now, does it just stop in the middle of the air, or does it fall and hit a floor and it stops at the floor? It'll fall and hit the floor. Okay, same thing here, everybody. Right here at this $2 mark, somebody in the stock market said, hey, this stock is at $2. I think this is a great buying opportunity, so I'm going to buy in at $2. Guess who was sitting down here at $2, everybody? I'm going to put a B down here, a B for buyers, everyone. You have the buyers sitting down there at that $2 mark. In other words, you have the buyers down there at the LP. At the LP, the lowest price, that's where the buyers are. Okay? Up top, up here, everybody, at the HP, when the buyers bought in at $2 and they drove the price all the way up here to $30, who stopped the stock from going higher? Someone had to say, hey, we're not going to let the stock go higher than $30. Who stopped it? Everybody, I'm gonna put an S right here for the sellers. You have the sellers up there, everyone. Okay? So at the HP, everyone, while the HP is so important, it shows you where the sellers are. And while the LP is so important, it shows you where the buyers are. So how does that help me the next day? So on Monday, I know my buyers are at $2 and I know my sellers are at $30. So let's go to this example. Watch this. So now let's see how the understanding of Monday's candlestick, okay, can help me when it comes to Tuesday, my trading on Tuesday. All right. So let's go to this red candlestick. Now, the red candlestick, we already understand. The red candlestick, the opening price is at the top of the red body right here. Okay, we have that understanding. And we have the understanding the closing is right here. Okay, but if I'm coming into Tuesday, everyone, first thing I'm going to do, I'm going to look back at Monday's candlestick and identify my lowest point and my highest point. Okay, I'm going to identify my lowest point and my highest point. Chris, why are you going to identify your lowest point and your highest point? The reason why is this, everybody, because my lowest point from yesterday showed me where the buyers are, okay, where they were, okay? And my highest point from yesterday, Monday's candlestick, this red green candlestick, shows me where my sellers are. Okay, so as long as I can identify where my buyers and where my sellers are, I can understand, or I will know potential places to buy and sell for today. So I will come over here and say, hey, the LP was at $2 yesterday right here. So I'm going to draw a line right here. Boom. All right. Then I'm going to come right here and say, hey, my HP was right here yesterday at $30. So I'm going to draw a line right there. So now, everybody, what do I have? I understand where my buyers are, put a B right here, and where my sellers are, put an S right here for the current day. All right. So now when this candlestick opens, it opens right here. Okay. It goes up some, say for example, it goes up some, then it falls down here. And it comes all the way down here, everyone. Now, when that candlestick comes down here, what do I know as a trader? I know that, hey, we have buyers down here at this level because yesterday the buyers was at the level. So when the stock comes down here, this is a potential buying opportunity for me, everyone. All because yesterday's candlestick told me, hey, you have buyers down here at the LP of yesterday. So as long as this level is not broken, the buyers are still there. So I can look at this as a buying opportunity, buy in, and I can make some money off of that particular buy-in, particular level because the buyers are sitting there. Now, once I buy in, I understand something else. I understand yesterday the sellers were right here. So I understand that, hey, if I buy in right here, I should potentially be getting out somewhere up here. Now, you can get out anytime you want to. This whole journey back up, you can get out anywhere you want to get out at. But I know that, hey, when I get up here, I should be completely out of my trade. Why is that, everybody? Because yesterday, what happened? The HP was at $30, and who was sitting at $30? The sellers, because my HP showed me where the sellers were on the previous day. Okay, so somebody, if you're a day trader and you day trade a lot, everybody, these are very, very important things to understand about the candlesticks. If you're a swing trader, you may not look that in depth as far as getting in and out the very next day. It may just be, this is a location for me to get in at so I can hold a swing trade for a couple weeks or a couple months. But as a day trader, these are levels on the charts where you can do some quick scalping, you can do some day trading, and you can make some decent income based upon understanding the full story of a candlestick, the opening price, the closing price, the LP, which is the lowest price, and the HP, which is the highest price. Everyone, if you enjoyed this video and hopefully you got some understanding from this video, I have a free class that I'm having this upcoming week. And if you want to learn more about the stock market on how to trade and work a full-time job at the exact same time, look in the description box below. I will have the link for you to join the free class that's coming up very soon. Everybody, I hope you enjoyed this video. You all have a good one. All praise to the Most High. I'll see you soon.